All right, it is Sunday, March 26th. Going over some more stocks, doing some more videos, checking out the SPY. Let's take a look at the SPY. Spiders, S&P 500 Trust Series ETF. Look at this move. Okay, going back to 2020, of course, COVID, the big drop. The low on the SPY was 218.26. And then look at this move up. Everything was moving. You had every type of bullcrap stock going up. What was it, like Carvana stock? What was it, like 300 or something? It's not $8. Every scam stock, everything was just going up. And then all hell broke loose. The Russia war, yeah, everything just started collapsing. Interest rates now, so it looks like a big pyramid up. But are we going to go back that far below? We'll see. Is this continually downtrend where we go down over a few years? It's been now January. We're in March, so it's at a year and 3 months. SPY hasn't really done much. Of course, it's gone down. But let's see here. So we had the peak. I drew all these yellow lines to show lows basically on these moves. And then you had moves up. You can see here back in last February, March, that move. There's trend line. Then we went down to June. Then we bounced up August. Right back down October, which is standing right now as the low, which is 348.11. Then we bounced up. November, December, we had a rally. Small little pullback. And January, we went up. Now, I have these lines. Fibonacci retracement level. See this? 23, 38, 50, 61, 100. I put it to 100 as the bottom. And then there will be the low. You can see here retracement level, 50% retracement, 32.8, and all the way up. So right now that low is at a 50% retracement level from bottom to top. And it's pretty much, you can see right here, it goes pretty much right on the line at 350. All right, so you can see here the trend was down. You had a big broadening wedge. A broadening wedge is where it sort of starts out smaller and widens. That means you have more volatility, you have bigger and bigger moves, which we had. Now, from that June, we went up, back down October, and then December, but we did not get the low in January to break that. So that sort of broke the trend there. We went back up February, January, February. Nice little move here, 380 to near 420. And now we're in another little broadening wedge here. Not as big, of course, as this massive move, but little broadening wedge here. And we're right now 396.46 as we stand Sunday. Now the high on this, you can see here, it's trying to get over this line each time it's failed. And the low is getting lower. And you can see here on stochastics, hit a bottom, we bounced. We didn't get back up to 80 to 100, overbought. So we're sort of caught in that 51.77 level, right in between. Any 50 mark, the line here, 50 is over, under. You're going to go up or back down. Middle part. So what are we doing next here? That is the question. And it's hard to say with banks, all these banks failing. We're going to get a move down. A lot of people still say a move down. I still say we test overall 350. Now, I thought it would come January, February. That didn't happen. Is it going to be later in the year now? They keep more job layoffs. Everything this keeps happening. But the one thing that keeps happening on the other side is job market still stable. Unemployment rates, 3.4, 3.5%, 3.6, around that level. You're not getting the job losses. So a lot of things are happening, banks failing, but nothing's really happening as far as the job market. So you have pretty much a channel now. It looks like 430, maybe a little below that. This we'll call it almost 420 line. You've hit that many times back in June, August, September, a little above. November, December, right here, and back here in February. And the immediate low, it looks like right here, is 380, slightly below, maybe 375. So anywhere 375 to 420-ish. That's a little channel going on here. Which way are we going? Let's look in the weekly. Let's see if we can see anything in the weekly. Yeah, in the weekly, you can see, look at this move. Yeah, ever since the COVID move, you're pretty much up between 80 and 100. Look at this. It's overbought and buried, which means, it keeps going up and it's staying up. It's not just coming down just because it's overbought. And then January hit, this went down. We bounced, came back down further, and really hit a bottom pretty low here in the weekly, which was about 13 on stochastics. We bounced up huge June, July, and came back down very oversold again, which was about 542 on stochastics. Came back up. Now we didn't come back down like I said, which was right there in January, pretty much around January. You can see the crosses they held, they changed direction, went back up. You didn't get that move down. And again, now the thing on this stochastics, we're crossing 50. It hasn't done that since October, so that's interesting. You have divergence here. Divergence is either stocks go up, this goes down, or this goes up, stocks go down. So right here, you have divergence on stochastics. This is going down, but the stocks are sort of, bouncing, trying to go up, which is a sign something's wrong here. That means someone's wrong, or indicators wrong, or the stock market's wrong, which means we own back down here. We haven't crossed over, so which means it's not exactly bullish, as you can see right here. When you see this in July, you're going up. That was bullish. October going up. Crossover January up. This ain't going up. Hasn't even crossed over yet. So there's a lot of indecision here. I don't necessarily like it bullish here. I'll be more bearish. Hasn't really shown it's going back up. Two strong candles here, green, but nothing's really proven at this point. On the weekly or the monthly chart hit a big low here in stochastics, which were 348.11, like we said, October. Now you bounced off that, had a nice little move here. Stochastics came back, looked like it was going to cross over low, and it came back up. And you can see here, as I try to spread out the numbers here, you can see right here this 415, a little bit lower, like I said. Look at this, bouncing up and down that low. Now we're pretty much in this channel here. 380, 415, 420. You have the 13 EMA still hanging on above the 20 EMA, which is technically still bullish. So you can see this. See the pink line? That move on COVID all the way up, the pink over white is extremely bullish. So it was a ride up the mountain, ride up pyramids, whatever you want to call it. And now we are pretty much sideways. So what are we going to do? We're going to go back down again, bounce again, be in a channel for a while. You could be in a channel again for a little bit till something breaks. Like, is there news, something going to happen major? Do we get to either move up or down? That's the question. You can see where the lines are. So 415, 420, and then about 375-ish. So there's your room to play right here. Let's look at the quarterly, see if we see anything. Now, the quarterly looks definitely more impressive. You have right here, look at the space. That's when you had 3 candles in a row, which were bearish. Look at the space here. It's extremely bearish. Now you're touching. The white looks like it wants to cross over red. It was extremely bullish in the quarterly chart. That's because you have 2 candles that have come in green. Just look like back on COVID. Look at this. 1, 2, 3, 4, 5, 6, 7 straight candles in a row green. And you can see all the way back to 2009, the stock market crash. You had 3, 6 red candles. Then we went up off the races. Yeah, these little candles in between these quarterly were bearish. You can see here the 2018 where they thought they were going to raise interest rates. Everyone freaked out. 2017, 2018, late 2019, and COVID. And then you had 3 from the Russian-Ukraine war, and everything else falling apart this year with interest rates now. Now, it looks pretty bullish as far as a crossover. Doesn't mean it's going to cross over. It's been still a strong January, February, March at this point. And you can see the yearly going back to 2000, you have 3 red candles, 1 2009, you had 1 from 12/30 2022, and you have a green. And then you have red over white, which is bearish technically. All right, so looking back at the overall chart, you can see it's not necessarily in a downtrend now, but it's in a channel, and it's either going to go up or down, from the channel. Just how long are we going to stay in this channel at this point? With everything happening, the news, I don't see how this can be bullish. I mean, you could come back up to 410, 420 again and bounce back down. And that will be my thoughts. If we come back up to 410, 420, maybe even a little higher, and then I think we get a move back down. But um, earnings should be less. And you have other issues with the banks at this point. How many more banks are going to fail? So we come back down. I think we'll be in that 380 to 420 range, unless something happens, like another bank fails, and the market tends to unwind from as far as jobless claims. They haven't creeped up yet. You don't see major jobless claims. That would be a key indicator. So we'll watch for that. So this week, we'll see if we get any major news to push this up to 420, or if not, you go back down to 380, maybe 375. So it's an either or scenario. Watch for news in the market. Overall, I still think we go lower, meaning this year, I still think we test 350, maybe even shoot below that. We need some sort of washout market where, volume increases majorly, like COVID. Look at the volume there. It was up to, 387 million. We need something to really push this down and, wash out the market. And then we get interest rates where he finally stops raising interest rates and things settle with the banks. They clear that up as far as no more bank failures or anything like that. So I still think the rest of this year there'll be major volatility. And as far as this week, we'll see where we go. Are we up to 420 or down to 375? I'm leaning still down overall. Even if we bounce here, I think it'll be short lived basically at this point. All right, so you can see the SPY. Big move up, front side of the pyramid, back side of the pyramid, sort of stuck here to go back down fully yet. Test COVID. That if it does test that, that would be 220. That'd be crazy. Or the COVID high before the drop, which was what's that about? 330, 340, which we almost said it was 350. But let's see what happens here. We get definitely a mess here after this broadening wedge didn't come back down January. We're sort of like channeling back and forth. Indecision each day, volatility. Oh, something happened in the market and down 500, up 500. It's great for day trading. Trade your ETFs at 3 times levered. It's been awesome. That's why penny stocks haven't been great. There's no follow through because the volatility in the market is tremendous for trading right now. You don't even need a lot of size on 3 times ETFs. All right, so that's it. We'll see what happens this week. And please subscribe to Mike Kim and Trade Alerts. We're out. Peace.